Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with Arise Mortgage. Grab a bubble tea and enjoy the episode.
Welcome to another episode of the Asian Connection Mortgage Podcast. My name is John Lee, mortgage broker in Vancouver, and I am here today with Shannon Dupuis. How's it
Hey
going?
everyone. Good, good. How are you?
Pretty good. Shannon, you are a realtor from with Remax, and tell me a little bit more about yourself.
Yeah, so I've been a realtor now for 5 years, and I'm part of the top 10% of realtors in Greater Vancouver, which is known as Medallion Club. I specialize in the Tri-Cities and some of the surrounding areas around. And my background prior to real estate, I worked for a home building company, which gave me a lot of knowledge in interior design, cost of materials, etc., and land development. And then prior to that, I actually worked in property management, worked for strata. So even before real estate, I was doing like 3 years of work related to real estate. So it was a really good stepping stone into my real estate career. And a lot of my clients appreciate all the knowledge I have from that. So I technically would say I've been in the real estate industry for 8 years, but 5 years licensed.
Cool, awesome. And prior to recording this podcast, we're going back and forth on like, oh, what we gotta talk about. And
Hmm.
we decided on the topic of budgeting.
Hmm.
And yeah, we were sharing with each other that purchasing a property in Vancouver is not easy. There's definitely a lot of planning involved. And for those who are first-time home buyers, yeah, you can't just wake up one day and just decide to purchase a place. There's got
Hmm.
to be a
Yeah.
time of saving, making sure you have a stable job, and to figure out your budgeting. So,
Hmm.
this podcast, we're going to be talking about all the secrets and all the tips and advice for first-time home buyers, and I guess all buyers as well, to figure out their budgets so that when they have purchased a place, then they're able to manage the cash flow well and
Hmm.
making sure that they're not putting all their money into the house and they become cash poor but house rich.
Hmm. Yeah, for sure. And that's a huge part about buying your house is the budgeting that goes into it prior to purchasing. And a lot of the time it takes time. So the sooner that people plan for their home, the better. And yeah, the sooner they talk to me or you is always a good idea too. Yeah.
So before we dive into budgeting, um, I usually like to have some icebreaker questions. And because it is Asian Connection Mortgage Podcast, it's very
Hmm.
interesting because I have lots of guests with their last name like Lee, Chan, Wong, but
Hmm.
Dupuis. No, that's the verse.
Yeah.
Tell me more about how you are Asian and
Mm.
but with the last name Dupuis.
Hmm. Yeah, so my background is I'm Chinese and then I'm also French Canadian. And my dad is French Canadian, so that's why I have the last name Dupuis. And it's funny because I find a lot of the time when I'm at an open house, like a lot of people expect me to be a different ethnicity because, or not mixed, just because of my last name. And yeah, and I grew up mainly with my dad. So yeah, I'm half and I would say I grew up more so in Western culture, but I also have a lot of family in Hong Kong. And so, like, I've been to Hong Kong 6 times. I plan to go back many more times. And so, I do, that is a really big part of me. It's half of me. So, yeah.
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 Well, how comfortable are you speaking Cantonese though?
That's a good question. It's funny because I do have people that think I speak Mandarin or Cantonese. My family in Hong Kong speaks both. So I know basic words to get around, of course, because when you're over in Hong Kong, like you need to kind of know the language to get around. So I know that, but I'm not fluent. But I am fluent in French. So that's kind of something that I think confuses people sometimes. And I definitely have plans to learn Mandarin as well, and be able to speak fluently as well. Um, but at this time, I am fluent in French and English, and I don't really get to use French that much actually. So I think if I knew Mandarin, I would definitely be able to use that more. But yeah, so
You know, what's a good way to
yeah.
learn Cantonese or Mandarin is to go to Hong Kong or Beijing and just be hungry. Because once you're
Mhm.
hungry, then you're going to be
Yeah.
forced to be like, where's the restaurant? And I want chicken, I want beef, I want fried rice. And you just be able to like learn
Mhm.
all of those terms in Cantonese or Mandarin. And you just
Mhm.
come back and I guess you'll just be ordering for me when we go
Mhm.
for lunch or dinner.
Yeah, 100%. And my older brother actually, so he knows Mandarin more than I do. And like a big part of it was going to dim sum, and he would just order different things. So he actually, and then he's been to Hong Kong for like 2 months straight, and he was learning at the same time, was able to actually like speak and use the language. So he's like, he knows a lot more than I do, and I think I need to really immerse myself in the culture, and I definitely have plans to do so. So
So
yeah,
speaking of dim sum, what would you say is your
yeah.
favorite dish? Your must have when you go for this.
Oh my gosh. That's so difficult because I order everything. Like I truly do love everything, but one of my favorite will probably be shrimp dumplings. That's always a
Oh, the
classic.
hagao.
And yeah, hagao
Oh,
and siu mai. Those are my two favorite for sure.
the two classic.
Um, two classic ones, but there's so many good dishes. It's really hard to choose. I love it when you go for dim sum and they have the cart because you can really just choose everything you want right then and there, and I love
It's
it.
so
Yeah,
dangerous though. Like you
it's
like I'll take this,
it's
that.
really dangerous.
that.
Yeah. I always order too much and I have to
Yeah.
take food home. Like it's bad. Yeah.
Awesome. Well, thanks for sharing. And let's dive into our topic today, which is budgeting. So intro question would be, okay, so like what would you say would be like the first step you would recommend to someone who's just starting to create a budget for buying their first home?
hmm That is a really good question. So the first thing I would recommend, there's actually three things, and that's kind of what I did when I bought my first home. So like even before going into real estate, like even when I was still a student, I met with a financial advisor and we kind of went over all of my expenses and what I was paying for. And so we were able to like eliminate a lot of the expenses that I didn't really need, and then I could like take that extra money and put towards saving a down payment. So financial advisor is super important. And then I would say realtor and mortgage broker. So those are the three, because the realtor is going to be able to walk you through the steps of purchasing and go over all of the cost involved, all of the hidden costs, and go over the timeline of when all of those costs are due, right? Because there's kind of like different stages of when you have to pay things
Mm.
when you're buying a home. And then the mortgage broker is so, so important because you're able to do the pre-approval to say, okay, you qualify for X amount with this amount of a down payment. This will be your monthly mortgage. And you're able to go over all the cost on the mortgage side of things. And the mortgage broker also talks about closing cost, and we do as well. So it's kind of nice to have like two people talking about all the cost involved in the home buying process. So I would say those three have been like the best, I guess, best team to have is
Yeah.
those three when you're planning to buy your house. Yeah.
So then, how much money should buyers aim to save for a down payment? Like I know, of
hmm
course, as a mortgage broker, like I would tell people to save at least 5%. That's like the minimum down payment. Um,
hmm
some people they think, I don't know why, but it's a myth. Like they just think like they need at least 20%
hmm
to
Yeah.
buy anything. So what would you say buyers, especially first time home buyers, what's a reasonable amount that they should aim for to save for down payment?
hmm So that really depends on what they're purchasing, I would say,
Mm,
because there's a chart of how much you need to, put down. So a lot of people, if you search it up online, a lot of the times the ideal number is 20%.
mm,
Of course, that's ideal because if you're doing 20% down, then you don't pay what's called CHMC insurance. And that's like an extra amount on top of your monthly mortgage payment. So if you don't have to pay that, then you're saving a little bit more money, which is good. However, doing 20% down on a property in Greater Vancouver is a large amount of money most of the time. So yeah, I would say 20% is ideal if you can. However, a lot of my first time home buyers are doing somewhere between 5 to 15%. And I would say majority are doing 10 to 15%. I don't know if you want to go over kind of like the chart of how much you need per price point,
mm.
or I could go over it, up to you.
No,
Yeah,
yeah.
yeah.
No, my next question was going to be like, okay, well, like well, we were talking about all these like percentages, like 5, 10, 15,
Mhm,
but like let's actually use a dollar amount. And I was gonna ask you, like, what would you say for a first-time home buyer? Like, what would be the price range that they would be looking at? That's something that's achievable, but and also like still livable.
mhm. Okay. Um, yeah, I mean, I have a handful of clients that have purchased under 500,000
Okay.
and they're putting 5% down.
Oh, okay.
So let's just say you're 500,000, 5% down is 25,000.
Yeah.
So 25,000 for a lot of my first time home buyer clients is very achievable to save up. And then the monthly mortgage amount on 500,000 is typically like a good range for them as well.
Mhm.
So yeah, I would say like that's kind of like an ideal world. But a lot of the time, if you're purchasing something 500,000 and below, you're going to be more further east within BC. And so, like, if you have a job where you're not working in downtown Vancouver, then a lot of the time that's very doable. But I want to say a lot of my first time home buyers are purchasing between like 550 to 650 is like the really common range.
Yeah.
And they're putting above 10% down. They're putting between like, yeah, they're usually about 15% down.
Yeah.
Yeah.
I was gonna say I'm surprised
Yeah.
there's still properties out there that's 500
Yeah.
or less. And you
Yeah.
mentioned about East, like how far are
Yeah.
we looking at? Like when you say 500,000?
Yeah, so I mean, people are like, it's funny because when I'm like, okay, you got to go east, people think Abbotsford.
Yeah,
They
or
think you're
even
going,
Chilliwack,
yeah,
they
they think
just think
you're
it's
in
like super
Chilliwack.
far away, right?
Yeah, which don't get me wrong, I have clients that are in Abbotsford and Chilliwack, and I actually have one client, first time home buyer, purchased for 360 in Abbotsford.
Wow.
So his budget was awesome. Like we sat down and kind of went over, okay, um, what to do for that price point and then how much that would cost him and stuff. And it all worked out. And his building isn't like 40 years old either.
Mm.
His building is 15 years old, so newer home. But I have like a handful of clients that purchased in Surrey and Langley, Maple Ridge, and Pitt Meadows for
Yeah.
under 500,000. One that actually will surprise a lot of people. I had a client buy a two bedroom under nine, it was just under 950 square feet in Maple Ridge. And the price we got it for was 475,000. That was actually like really great. And the building was built in the 90s, but we read all of the documents for the building, the depreciation report, etc. And they took care of a lot of the major expenses. So they took care of the balconies, the windows, the roof was metal, so last 50 years approximately. They did exterior work. They did like so much stuff to this building that it's one of the buildings I actually keep in mind when my client's like, okay, this is my budget under 500,000. Where can I be?
Mm.
And I know exactly where they can be because I've had so many clients within that range, and I'm able to really show them these other neighborhoods east, but it isn't Abbotsford, Chilliwack. I would say it's just past the Tri-Cities. So Pitt Meadows, Maple Ridge, Langley, and then Surrey. So
Yeah.
yeah,
That's still really
yeah.
good. And when you mentioned about your first time home buyers buying 500 or 500 to 600,000 range,
Mhm.
are they typically like one person buying or are they a couple who are buying?
Mhm.
Because why I'm asking is because if
Yeah.
you're buying with two people, you're
Yeah.
saving trying to come up with 25 or 35,000. That's a
Mhm.
lot easier with two people, right?
Yes. Yes. I will say from the 550 to 650 range, majority are couples. And a lot of the time, you can use your combined income and then you can share the expenses. So I find it's a lot more doable for couples. But I have had single clients that purchase between 500 to under 600,000. Yeah, they're usually under 600,000 because your mortgage on your own, depending on how much you put down, can be a really big chunk.
Yeah.
So if the income isn't super high, then it doesn't really make sense. So a lot of the time when my clients are purchasing just themselves, a lot of the time they'll be under 500,000. Yeah.
Got it. Yeah, so
Yeah.
we've been talking a lot about down payment and then the price that's listed for the property. But we know there are some hidden or other costs that are kind of behind the scenes, and you might not know until at on closing date. So
Mhm.
what would these be? And yeah, what would these be? And what would you say is the most important type of closing costs that first time homebuyers have to know and they have to include into their budget?
Mhm. That's a really good question because, like I mentioned before, there's expenses along the way.
Yeah.
Like there's expenses during subject removal, there's the closing cost expenses, and then there's the after cost expenses when you actually make the move. So, uh, so when I'm sitting down, I'm just gonna play it out how I'm sitting down with like a first time home buyer. I have like a buyer questionnaire, and we go over all of the cost, typically during that meeting too. And so a lot of the times when I meet with first-time home buyers, I ask them, hey, what is an affordable mortgage amount that you would be comfortable with paying? And they give me a number. So most of the time they're like, oh, 2,500 to 3,500. Let's just say 3,000, for example.
Mhm.
And then I follow up that question with, have you factored in home insurance, yearly property taxes, your hydro bill, strata fees, etc. I go through my list, and a lot of the time they're like,
Nope.
no. So then I'm like, okay, because you're telling me you're comfortable with 3,000, but easily with these added expenses, now you're almost 4,000,
But that makes
right?
sense though. I
Yeah,
get why, because when you're paying rent, well, it's 3,000. They don't break it down
yeah,
and be like, oh, strata and this and all that. Rent's
yeah,
3,000, pay 3,000. But now as a
yeah.
homeowner, well, this budgeting is very different.
Yep. Yep. And then I think the sneaky ones is like you have your monthly expenses that are set, which would be your mortgage plus those additional costs I just talked about. But you have your yearly costs too. So there's property taxes for the home, water and sewer charges. I find those are hidden costs you should just know about. And when you're offering on a property, your realtor should sit down with you and go over all the costs. I typically do that before my clients start looking, and I say, okay, if you're going for this price range in this city, the average cost for these expenses are this. And then, like, when we do put in an offer for a property, I actually slot in the exact numbers for that property. Um, so yeah, your yearly property taxes can be, a couple thousand, 3,000, $4,000 a year. And then your water sewer charges, depending on the city too, because some cities have it separately from
Mhm.
your property taxes and some include them in. So because I've, helped a lot of clients in different cities, I have a good understanding of which cities do what. And also they change it every year. So I just had a client in Langley. I've helped a bunch of clients relocate to Langley, lots of young families going that way. And so they're in the township of Langley. And for my understanding for township of Langley is your total property taxes the included everything in your water sewer.
Mhm.
And then I actually called them because I call them every time during the subject removal period just to like confirm details. And I was like, okay, so this is my understanding. Let me know if that's correct. And they're like, yep, that is correct. However, for 2025, they're changing it and they're separating it. So your
Oh,
yearly
okay.
property taxes and your water sewer charge are going to be separate and charged on different bills. So I just communicated that to my client. So I would say those two are ones that surprise people. Property transfer tax is a big chunk.
Mhm.
If you're a first-time home buyer, you have an exemption or partial exemption to property transfer tax. And that typically, before the new rules that just came into play for the adjustment for the exemption, before that came into play, the property transfer tax was such a big chunk of the closing cost. And so that one's super, super important. And then I would say the last surprise, I guess there's multiple. Sorry, I'm kind of going on trying to think of like all the multiple ones, but I think the other thing people don't account for is the adjustments. So when you go meet with your notary or lawyer, and so we talk about closing costs, but there's a portion of it called adjustments. So depending on when you're moving during the year, a lot of cities, the owner will pay their property taxes on July 1st, sorry, July 2nd, a lot of cities. So if you're moving post July 2nd, like let's say you move in end of July, then that owner has already paid the full year of property taxes, which means that you have to pay from when you're the owner for the rest of the year. And that gets adjusted on your what's called a statement of adjustments. The notary will go through it with you, kind of thing. Um, but again, if you're a first time home buyer and you see a statement of adjustments, you're like, what the heck is this form? So a lot of the time, what I do as part of my due diligence and during subject removal is I walk through my clients like, this is your approximate closing costs. And I actually have slotted in a number for adjustments and I like to over budget. Yeah. So I go through it with them so that it's not like a surprise. But then the exact number that they have for that will be given by the lawyer or the notary. So yeah,
Yeah, I'm so glad we're
yeah,
going over this
yeah.
because just answering that question of hitting costs, it took us
Hmm.
a few minutes to answer.
Hmm.
So you
Hmm.
can imagine like if you're buying a TV, it's like what's the hitting cost? It's like, oh well, the TV's 2000, but when you go to cashier, it's probably like plus GST and PSD.
Yeah,
And
yeah.
and that's it. That's your answer. It's like less than
Hmm.
10 seconds. But it took like a few minutes just to go over this long list of hidden costs. And
Yeah.
first time home buyers, like they're just looking at, oh, what's the price? How much do I need? And then they think they have enough until they find out it's not. So I'm so glad we're
Hmm.
going over this. And yeah, definitely breaking it all down when you uh even before putting in the offer, just to make sure you
Hmm.
have all the money in place. Because most of these, I would say not most of it, all of these, you can't borrow. It has to be actually
Hmm.
cash in your bank account ready to go. So it's actually on
Yeah.
top of the 10, 5, 10, 15% down payment that we're talking about. Um,
Hmm.
and you have to have that on the side, ready on hand to hand that over
Hmm.
to the
Yeah.
listening.
Yeah. And actually, a really good point to mention is when you're going through the negotiations, when you put an offer on a property, like let's say you put an offer in for 600,000
Mm.
and you're multiple offers. And then all of a sudden, you really want this property, you can do the stretch and you're like, okay, I'll pay 630 for this. Those costs increase.
Yeah.
Like there's things within your budget spreadsheet that will increase because of that price difference. So I always like to every time I get an accepted offer, I redo that evaluation and I go over it with my clients and just like give them a heads up, like, hey, because we went a little bit over budget, your property transfer tax is going to increase to this amount
Mm.
slightly. And so we kind of go over that too. So I'm sure there's things I'm missing, but that's why I have a spreadsheet. And that's why I go over it with my clients in detail because nobody likes surprises. So,
So say
mhm,
you have helped them figure out all the budgeting, the breakdown, what their cost would be per month.
mhm.
So what percentage of their monthly income should actually go towards the all these expenses to the mortgage payment or even like to all their debts?
Mhm. Yeah, so that's actually a really good question. And that's something that my clients, especially first-time home buyers, don't ask me actually. That's actually a good point. They don't ask me that question. And if you were a first-time home buyer looking online, a lot of things are going to tell you 30%. Um, I think 30% and below is ideal, but in Greater Vancouver, you're going to be mostly going to be between 30 to 44% of your monthly income is going to go towards your home.
Yeah, because it's
And
more expensive,
yeah,
right?
it's more expensive. And I find that, the salaries here haven't really adjusted to account for that. And it's kind of like makes you wonder like what the heck is going on. But yeah, most of my clients are between 30 to 44% of their income is going towards their home. So, and then yeah, you could probably go more into that about the debt to service ratio when you're qualifying for a
Yeah,
mortgage.
just to
Yeah.
add to that, like that ratio, like around like 44%, that is consistent with what lenders are considering as well. And what I
Mhm.
share with clients is that, clients are concerned, it's like, oh, am I able to like afford these payments? Well, lenders are actually even more scared to make and more concerned to make sure that you are able to make your payments because they're the ones who are going to be lending you the $500,000 mortgage. Like you're not
Mhm.
like they're giving you money, not you're not giving them. Yes, you're paying the monthly payments, but the big
Mhm.
chunk is coming from a bank. So banks are making sure they're doing their due diligence and making sure all the ratios work. And yeah, the
Yep.
general calculation is that they're going to take all your monthly expenses that's shown on your credit bureau. So it would be things like your credit card, car loans, things like that. And they'll also lump it on top of your this potential new mortgage. And their hope is that with everything added, only around 44% of your income, gross income before tax, would be going to all these expenses. Now,
Mhm.
this is their general rule. But of course, every single person is different when it comes to expenses because not all expenses show up on your credit bureau. So one big one, for example, and in Vancouver, this shows up a lot is childcare. People are like, childcare is so expensive. It's like,
Mhm.
almost paying another mortgage. It could be like $2,000 a month, but it doesn't
Mhm.
show up on your credit bureau though,
Mhm.
because it's not, you don't have to like pull credit or apply for it to
Mhm.
qualify. So it's not really a debt. Um, so it's really making sure that yes, the bank has their calculation, but you as an individual, you know what your expenses are. Like Netflix, Disney Plus, again, those also don't show up on your credit bureau,
Mhm.
internet, but you have to pay it as well. So um, factor those in as well. The bank will be comfortable, but also you have to make sure you're comfortable as well. Another thing is, I don't know if you heard me earlier, is that they take 44% of your gross income, meaning
Mhm.
before tax.
Mhm.
You don't take home, if you make 100,000, you're not taking home 100,000.
Mhm.
Right? You're probably taking maybe 65, 70,000.
Mhm.
So that is a huge chunk that
Mhm.
they're factoring in as part of the calculation, but you're actually not keeping in your pocket. So
Mhm.
um, make sure when you do your calculations, you're also using your net income to make sure your net income can cover your expenses.
Mhm.
Because the gross and the net, especially in Canada with taxes so high, it can play a big part on on whether or not you are cash flow positive or negative.
That's a really, really good point to mention. That's something I talk to my clients about too,
Yeah,
because you're, getting qualified for X amount on your gross income.
yeah,
And so that's super important to budget is that, sure, you can buy a house for, let's say, 700,000, but should you? Probably not. You really got to go over your expenses and how much you take home because it's got to be affordable.
Mhm.
Hmm.
But Shannon, it's so hard though with Vancouver
Yeah.
being expensive. So what advice would you give to like first time home buyer? Like should they stick with their budget or really try to stretch it so that they're able to achieve their dream home?
Hmm. So, again, really good question. And that comes up all the time because sometimes when you're buying a property, that 50K difference can get you so many more things you want in a home versus like making the sacrifice. But as a first time home buyer, I think it's really important to remind yourself that it's your first home and that this is a stepping stone towards getting closer to your dream home. So a lot of the times I'm just like, I'm very honest straight off the bat with my clients because there's no point in, saying for sure we can get you this home for the top budget. Because realistically, if I were to imagine my client living in that, per se dream home for their max budget, they're not going to be living. Like a lot of the time, my clients like to do leisure activities. They like to ski, they like to bike, they like to golf, and all of those things cost money. A lot of my clients like to travel. I don't know who doesn't. And so it's like, yeah, sure, you could go to your max budget, but what are you eliminating in your day-to-day life to do that? And so the best case scenario is I get my client a property for a really good deal for them so that they can still, have a stepping stone, enjoy that house, which they typically do. We're able to find something that they really like and can envision themselves living in. They love the location, etc. But then they're still able to do all the leisure activities that they like to do. I think a lot of people are not blindsided, but they kind of ignore that factor of it. They're kind of like, oh, we're gonna do everything in our power to get this dream home. But then you have to think about what your day-to-day life and your life in the year looks like while living there. And I've had clients where they were, at the top of their budget or close to, but they sacrificed a lot to be there. And they told me, which I think you'll find kind of funny, but they're like, Shannon, we don't care. We'll eat cup noodles for a couple of years if we have to, because we love this home. And then, yeah, and then they go for it. But yeah, that's something really important to think about. And I would say never go at your max budget, honestly. Let's try to get the property for, a price that is super comfortable, the monthly payments plus the extra cost, where you can still do all the things that you love to do. So, yeah.
Yeah, I think it's easier said than done.
Hmm.
Because when you are buying a place to live in, there is a lot of emotions involved as well.
Hmm.
Whether it's how long you've been looking for a place or um, a certain location that you really want and really fits the family, and just nothing has really come up, for example. Um,
Hmm.
or in a really heated market where you're just bidding and you're losing. And every time you lose, the next time it's like, 20, $30,000 more. And you just really want to stop that cycle and just get something. Um, I guess what I'm trying to say is trying to be understanding because now we're just sitting and we're calm and we're just
Hmm.
chatting. I think it's very easy to just say like, oh, don't go going for your dream home. But yeah,
Hmm.
it is definitely different and we understand. But the good thing is that the market, there are ups and downs, and I would say
Hmm.
this is a good time to go out and because there's so many options out there and you don't really need to
Hmm.
fight for anything.
Hmm.
But yeah, I would also say to try to stick with your budget as well, because that
Hmm.
will also help you with letting the emotions take over.
Hmm.
Yeah. But yeah, I also get your point. I remember seeing a meme where like it was like, oh, so what are you going to do this weekend? And the person's like, I'm just gonna stay home. because I want to enjoy the mortgage payment that I've paid for.
Yeah. 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 And a lot of people do it. A lot of people do it, I will say. And like I have clients where let's say they're pre-approved for 700,000 and the place they want 725 and they actually stretch the pre-approval a bit more. And it's totally doable for them. Like it just really depends per person. And so I think it's really important to get to know your client and what their day-to-day life is, what they do for leisure, where do they work? Because their commute from where they live to where they work, that's gas money, right? So there's like so many different things with each person. So yeah, ideally you'd want to be within your budget, but you know, there is people that go at their max budget or even a little bit more. Yeah.
So this is
Yeah.
my last question.
Mhm.
So do you know any tools or resources that you recommend for, say, tracking expenses or staying on budget throughout the home buying process?
Mhm. So I mainly use Excel. I've always loved Excel, so I create so many different spreadsheets for all different things, like my home budget, my client's home budget, etc. I use it for work and my personal life. I think it's really great to create a home budget, which includes all of the monthly fees that you pay, your mortgage, your hydro, um, home insurance, yearly property taxes, all those things we went over before. But then also include your phone bill, your internet bill, your car loan payment, the amount of money you spend on gas per month. If you're paying for a gym subscription, like really just sit down and write down all of your expenses. A really good way to do that too is to log on to your bank and print out the statement and then just go over all of your monthly expenses. And that way you can line it up with your spreadsheet. Um, and yeah, and then basically per property, slot in the exact numbers for that property within your spreadsheet. Um, if if you're my client and you don't want to do that, I've created a spreadsheet. So like I've created one that I can
Like, do
send to
you have
my
a template
clients.
already?
I do. And it's like it's got all the formulas in there too. So if you adjust something, it automatically adjusts the total amount. So I give my clients that. I've had clients of mine that are very analytical and love Excel, and so they create their own thing. But then I always ask them, okay, what do you have on your budget? And then I inform them on things that they should add to it if they're missing anything.
Mhm.
So yeah, that would be like the best tool I personally have. But you know, there's other sites like you can use QuickBooks and other things to track your budget as well. But yeah, I personally like I just really like Excel and I like templating things the way that I visualize it. Like my spreadsheet's very visual.
Mhm.
So yeah, so that's my best tool, I would say.
Awesome.
Yeah.
So for
Yeah.
those who don't have a realtor yet and they really enjoyed your talk about budgeting and they want your template, what's the best way to get in contact with you?
Just reach out to me. You could give me a call, you could email me, you could reach out on social media. I have Instagram, Facebook. I use Instagram the most just because I love Instagram in general. So a lot of the time, new clients of mine will reach out to me and DM me, or they'll reply to one of my stories and say, "Oh, I love this. Like, I'd love to know more." And then we just kind of start the conversation from there. But I'm super easy to reach. Like, if you're calling me, I'm picking up my phone on like the first couple of rings, unless I'm in a meeting. So, yeah, phone, email, social media. Um, I'm able to send you my spreadsheet. So I also have a buyer's guide, I have a seller's guide. I'm very structured. So usually when my clients are working with me, there's so many touch points that I'm going through with them so that when you are a first time home buyer, there's so much information. It's like super overwhelming a lot of the time because you just don't know a lot of this information. And so I pretty much walk my clients through the home buying process step by step and give them everything they need to know. So when we are meeting, I go through the steps. I tell them, okay, these are things you need to know. But don't worry about, you know, memorizing this because I'm going to be telling you. Like I'm basically holding my client accountable. A lot of the time I'm like, Have you read the strata docs? Okay, have you thought about this? Have you thought about that? And yeah, I think I can really relate because when I bought my property, um, yeah, it is overwhelming. I don't know how else to explain it, but it just is. And so you just got to have the tools in place to get rid of that stress. Um, you'll still probably be stressed along the way, but if you can eliminate a lot of it, you can enjoy the process more of buying your first home and be proud of it. Like if you're a first time home buyer and you're purchasing a home in Greater Vancouver, that's like a huge accomplishment. It's hard to do. And so I'm really realistic with my clients that way too. When someone comes to me, they're like, "Hey, I want to buy this home." I'm like, "Yeah, sure, let's do it." No, I'm not like that. I'm very much, okay, what do we need to do to get you there? And, I'm very open from the start so that they have expectations. And if they're not quite there yet, well, I would love to get them there. And it's such a full circle moment. Like I've had clients I've worked with for 2, 3 years and set them up on this budget. And then when they come around that third year and they buy their first home, it's so fulfilling.
Oh,
Like
for
there's no
sure.
other, like, I don't know how to explain. Oh,
Because
that
they
feeling is
actually
so
listen to you.
fulfilling.
They
Yeah.
listen to your
And it's like,
advice
we're
and
like, yeah, like we're in it together. We're in it
yeah,
together for like 2, 3 years. And I'm like, let's go. Like I'm so excited for them. So um yeah, yeah. I think just yeah, gathering as much information you can and talking to the right people is the most important thing to do when you
awesome.
start.
Well, thank
Yeah.
you so much. We're gonna put all your contact information in the show notes. So if you want to contact Shannon, all her information is gonna be there. Thank you so much for your time and sharing all your knowledge about budgeting.
Thank you so much. I think this conversation was great. And I think a lot of the stuff that we've gone over is stuff people should know and isn't talked about enough. So thank you so much for having me.
Yeah, you're welcome. Take care.
Yeah, you too. Okay, bye.
Bye. Okay.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the Asian Connection Mortgage Podcast.